Alrighty, team, we are back with another video, and we are going to talk about candlesticks and what are candlesticks, how they benefit us as traders, how we utilize them as traders, and why are we staring at fucking candlesticks on the chart? But at the end of the day, candlesticks, Japanese candlesticks, they are something that we utilize, and we use them very well. As you can see, it is with most charts. You see line charts, something like that. You may see the hollow candles. You may see the Heikin-Ashi, which is down here, but more than usual, most people utilize the Japanese candlestick. Japanese has nothing to do with anything, but this is what I don't know. I know a little bit of history about it, but I don't know a ton. But at the end of the day, we use them to read price, we use them to see volume in the markets, determine footprints and who's in the market and intention, and allow us to determine where price is likely to go. And every single candle tells us, as I mentioned before, a in-depth story in all in detail. So the more you pay attention to these, the better your chances are of being a great trader and understanding what price is going to do. I do not use indicators. I do not use anything like that. I use pair price action, naked forex, some people like to call it, and that's us just reading the chart. So if you are learning from yours truly, if you don't know Divine Williams, then I will be teaching you the same thing on a naked chart, how to read price, how to see each candle, what kind of candles you want to look for, and the importance of different kind of candles, wicks, open, close, volume, highs and lows, and we'll go from there. So stay tuned for more and get y'all some popcorn, relax, because it's going to be a great video. It won't be too long, but it's going to be very helpful. And by the end of this, you will definitely know how to read the candlesticks. All right, guys, so let's get straight into it. When we talk about candlesticks or Japanese candlesticks, as we mentioned before, make sure you write this down or just remember it. It allows us to do a lot of things, but mainly it allows us to reprice. It allows us to see the volume within the market, meaning how many players are in the market, how many people are in the market, how strong is price at the moment. And it allows us to read and determine footprints that we want to see in the market and allow us to actually get to the levels that we want. Sometimes you may see a smaller candle with less volume and you may not go for 150 pips, but then one day you might see a large candle with a ton of volume and that 200, 150 to 200 pips may be very, very reasonable. So it allows us to determine those three things and a lot of other things, but those for me are the main things, right? Now, on each candlestick, we have a high, a low, and open to close. As you can see, a high, a low, and open to close. This is the red one is representing a bearish candlestick, meaning it is selling off. It is moving to the downside. Hence why we have a open of price here. Price opened up at the 2.06 level all the way to the right over here, as you can see. Price opened up here. We tagged the highs. We got as high as 2.075, and then we actually ended up pushing as low as this point, and we ended up closing here. So it essentially the high and the low is very important, but as you see the candlesticks more and more, you'll say, okay, price open here, it closed here. Within that candlestick, we pushed up higher, but sellers stepped in the market when these buyers tried to push price up. This was a bullish candle, and eventually it ended up closing way down here. And it did reach these lows, but buyers kind of stepped in and closed it here. On the contrary, we have the buy-in, the buyer's candle, right? A bullish candle in the bull market where we have buyers. Prices moving to the upside. So we opened here. Sellers tried to push it. It made this low of this candlestick at the 2.04 level. And then we ended up pushing all the way up here and close right around here. So the next candle will open here, right? And when this closes down here, the next candle will open at this level. So this is really, really simple and is not something that I'm going to be super repetitive about. Just always remember you have an open, a high, low, and a close. Open, high, low, and a close. However you want to read it, however you want to remember it. But just know that these candlesticks, if it's whatever color you choose, I have black and green on my chart, but a lot of people see it as red and green. So that red candle symbolizes a down move. Hence why we know price is here. And then you'll see a line across the chart when in real time that price is now here at the close. And then also here when we open, and then we have price here at the open and close, right? So these are very important things you want to realize. And this is just a simple little breakdown of what we are looking at. We will look at some real examples eventually, but again, this is our open, this is our close. Price got pushed all the way up here. So this is the high of this candlestick. Let's just say we are on the 1 hour time frame, right? This is a 1 hour candle. So for every hour that prints, right now we are 1:45. At 2 o'clock, this candle will close, and then the next candle will print. And at 3 o'clock, this candle will close, and then the next candle will print. That's how it would work, going all the way throughout. Now, if we went to the 5 minute chart, this would be every 5 minutes. So a candle will print every 5 minutes, and then at 1:05, this candle will close, and then at 1:10, I mean 1:05 to 1:10, this candle will print. At 1:10, it'll close, and same thing on this bullish side. So as you can see, it's very easy to tell when these candles are moving up, but sometimes you may have a instance like this, for example, where yeah, it's easy to see them being repetitive like that. But if we were to move this bearish candle here, we open here. So if we were to see, so if we were to see something that in this nature, right, we got a bullish candle. It's not repetitive how it was before, right? But we have a bullish candle now. And then we have a push to the downside, and then actually this candle would be opening here. Sorry about that. And then we blow up here. Oh, that's fine. So this would signify, hey, we had a push higher. Then we opened here. We ended up closing here. Buyer stepped in and pushed price all the way back up here. And then we could potentially see a climb in price action, something like this. And we get our move to the upside, right? So these are different ways of seeing the price action. These are understanding where price is moving. Of course, we're going to go over some more stuff, but I do want you to, if you need to, take a screenshot of this. All right. Make sure you understand it. Make sure you know exactly what we are looking at and understand, hey, price is moving downward, price is moving upwards. And we remember we always have a open, high, low, close, open, high, low, close. Just the open and close switches on the bullish and bearish candle. That is it. It's very easy to see the move to the downside or move to the upside or move sideways. Simple, easy, to the point. That's just how it would be. All right. So let's get into the next one where you'll understand the importance of these wicks. And then we'll start to get into some real world examples and specific candlesticks that'll help you succeed and benefit in these markets. So now what we want to essentially talk about is the importance of the wicks, the importance of the size of the candlestick, and what does that tell us, right? So before we even get into anything else, different kind of candlesticks, let's talk about. So in the last thing, just a quick in our last video, quick recap, we talked about open, high, low, and close. Open, high, low, and close, right? Moving downwards, moving upward. We can only buy or sell. If it's moving sideways, then they'll be back, one after another. Essentially, something of the realm of like this, right? Not that, something of the realm of like this, right? It'd be side by side. That is a sideways movement. That's what it would look like. But when we talk about the size and the wicks, first off, let's talk about the size of the candle. So this candle right here is a strong, strong candle for two reasons. Because we have a large full body, right? And then we also have a large wick. This wick indicates that price is open here. Remember, this is our open, right? The price open here. Buyers tried to step in, push price higher, which it did, but the sellers kicked in and took price all the way down here, and then we rejected, right? So on a regular chart, this what that price would indicate in the back of our heads. This was what it would show to us. Price started here, open, push higher, went lower, and then closed around here. That means we made a price move from here to here, open and close, right? Then we look at the next candle, the corresponding candle. This wick, before we move on, this wick shows great, great importance. This is the intro to our, I believe it's a reverse hammer, right? A inverse hammer, right? So if you look at this one down here, it did the complete opposite. Price open here, we push price lower, sellers tried to come in, buyers stepped in, push price higher, and we closed right there. And actually, we ended up closing here. So this is what that would look like. So this shows a strong rejection and then a huge move to the upside. So this is a inverse hammer, while this candle here is a hammer, right? Inverse hammer, hammer. Very, very, very strong candlesticks at key levels. You could be in the middle of nothing and you see that candle and it means absolutely nothing. But If you are at a key level, which I'll talk a lot about later, supply demand, liquidity levels, midnight, open, close prices, stuff like that, then that is a very important candlestick that you want to pay attention to, especially if it's on a daily level. Then on top of that candle, we want to pay attention to our candlestick stats afterwards. We see a large body here with minimum wick, meaning there was no buying pressure to the upside. Like this one had some buying pressure, right? This one has none. There is not even a wick there. It opened and price pushed greatly down, right? So what this indicates is, let's remember we were here, right? Remember we opened high, low, and then we close here. And then our next candlestick did one of these straight to the floor, and then we close there. And that shows a significant amount of power in the market. Same thing on the buying side, right? We closed here. We pulled down on this candle here, right? We pulled down a little bit. We pushed all the way up, and then we closed without a wick. And then the next candlestick, we pushed all the way here, high, and then we come back here and we close. So this is a large move in the market signified by candlesticks. As you can see, it is very, very simple. Now, the opposite, it could be quite the opposite where we actually have smaller bodies. And I'll show you really quick what that would look like. So if I was to pull all these over really quick, let's just do a bullish example. Right? So we got a small candlestick here. We got one here. Come on. A small candlestick here, and then we got a third candlestick here. Now, let's say we were buying the markets up, right? And we seen something like this. It is the same hour and time frame. Remember, we talked about time frames. So say we still in the hour time frame, but we have a movement like this. Now let's add some wicks into that equation. So we got a large rejection wick right here on the buy side, and then we have a small one here, we have one here, we have one here, and then we have one here and here. That is a lot more choppy price action right there, right? Because now we are trying to buy the market up, but we are getting selling pressure consistently getting selling pressure. Remember here, big bodies, no selling pressure in the market, nothing at all. But here, we're getting a ton of, hey, we trying to buy up. Sellers kick back in, sellers try to kick in a little bit, buyers come back in, which shows a little bit of strength. Push higher, we push lower, we push higher, we push lower. And when you see a rejection candle like this, let's just say we had a supply zone to the left. That is a beautiful, beautiful rejection right there, where we could look to trade. And then potentially, more than likely, if it's at a key level, the next candlestick that you would see would be something like this, which here, sweep the highs. Oh, that ain't working. Oh my goodness. So something like this where we sweep the highs. I don't know why I keep doing that, but let's try this one more. Oh, I know why I'm doing that, actually. Sorry. So we sweep the highs, and then we come back over here and, we close low, right? So this is a big move to the upside, and then you get this strong move to the downside. Can you tell the difference in that body? So when we say we use candlesticks, how do they benefit us? We utilize them to read price. Yeah, we want to know where price is opening, closing, where it got to, where it couldn't close at, how low it got, right? But we also want to see how much volume is in the market and who's stronger. You can see all these buy candles and say, oh, I'm ready to buy, but it shows some type of weakness to the side. Even if we had a bearish engulfing candle, which is another candlestick you will learn about at these moments, right? So you got a bearish engulfing candle right here. Meaning this bearish candle engulfed the entire bullish candle, right? So we were moving up, and then we get a candlestick that push to the upside, sellers kick in a market, push all the way low below this open, below this close of this candlestick, and we end up closing down here. More than likely, the next candle is going to look something like this, where we continue that move to the downside and it continues with strength. It might give us a little bit buying pressure. It might do whatever, right? But essentially, that's what I mean by it allows us to reprice, but we also want to see how strong these candlesticks look. How weak are they? How strong are they? How much volume is in the market? You may see candlesticks like this during Asia session, which we'll talk a lot more about later, but you may see these candlesticks, right? These strong ones during New York and London session, making those big moves with the most volume in the market, meaning how many players are in the game. You don't want to play the game if you gotta buying if we need buyers and sellers in the market, we don't want to play at night when everybody going to sleep. We want to play in the morning when everybody getting ready to go and running. And let's do this. It's trillion, billions of people in the markets instead of hundreds of thousands. We want to work when there's billions of people because there's a lot more money flowing through there and a lot more opportunity for us. And this is what these candles show us. A lot of money in the market, no money in the market. You know what I mean? That's it. It's really that simple. So we got one more video on our candlesticks, and it's just gonna be not their importance, but different kind of candlesticks that I pay attention to at key levels. So in the future, when I'm teaching you a lot more, you guys will understand what to look for and what we are looking for in the markets when it comes to candlesticks. So stay tuned. All right, so we are back. In this video, it's gonna be like our second and last or last. I may just combine the last two to make it one big video, but when it comes to candlesticks, there are about 4 to 5 candlesticks that I'm looking for on each side. These same exact ones, just opposite on the opposite side. And essentially, what I'm looking for is we have a inverse hammer candle, right? Or a hammer. All this shows is a strong rejection from the opposite way or direction. So this candle, buyers wanted, we opened here, buyers wanted to push it up. We rejected. That was the high, but we couldn't close during that, say, 1 hour candle. And we push all the way down here and we close. That is a strong, strong rejection candle, which I'll show you more of with the proper, with the real candlesticks. And then we also have the hammer, which is the same. We open here. Sellers tried to push us lower. This wick indicates that price got down there but couldn't close there, and we end up rejecting and closing way up here. So that is a inverse inverse hammer and a hammer candlestick, and those show me a significant change of character in the markets, if you will say that. And something to pay attention to at key levels and levels that you want to trade from. And they do help a lot sometimes. Most of the time, I'm not waiting for the candle to close this way. I'm getting in down here, and more than likely it's going to close like this, give me a rejection. And then once you say you got in down here and you see the candle close like this, you should be very happy and be very confident in that trade. We also have a Marabozo candle, which is big body, a lot of volume, right? Little wick. You see here, we open here, no wick to the upside, no buying pressure whatsoever, just straight to the bottom, and we close, right? That is a Marabozo candle for sellers, bearish, and then this is a Marabozo candle for buyers. We have a small little bit of seller pressure, then we just blow up, close all the way at the top, and it's a strong body, and more than likely, especially on the higher time frame, 4 hour daily levels, the candlesticks after this candlestick will be about the same size, if not stronger than that one. So that is a strong, strong indication. That is a Marabozo candle. Then we have some of my favorite candles, which is a doji, right? These two. And the doji has a small body with huge wicks. And sometimes it's like very small wicks, on both sides, like something like this. But it's just a small body, right? Sometimes it even looks something like this, right? That doji signifies a lot in the market. Couple of things. It signifies that buyers and sellers are at an equilibrium point, and neither one wants to take control of price at the moment. They agree on a specific price. It shows a range. Let's say this was a 1 hour time frame, right? These candlestick printed on a 1 hour. It shows on maybe the 15-minute or the 5 minute that there was a range in the market, meaning something like this, where it's just sideways price action, right? There is nobody trying to buy higher, nobody trying to buy lower. As you can see, we try to buy higher, we got pushed all the way lower, then we got pushed back here, and then we end up closing in these relatively in the same area, right? And then the doji candle shows usually, hey, once you have a range and expansion comes into the market, either way, which I'll explain a lot more later in the market structure program, market structure sessions and what we talk about there. which could be in depth for my people who, show love and got the course. And the doji is probably my favorite candle. It tells us a ton, and when I see them, I'm watching. Sometimes you get doji after doji, after doji, and then boom, fly, or boom, fly, or drown to the ground. So the doji is a very important one. Again, inverse hammer, hammer, marubozu, marubozu, doji, doji. So that doji could be this small, or it could even be like this, where it's just no freaking body at all, like just straight wicks. I'm telling you, you will see it, and it's probably some of the best action in the market that you'll see. It could look just like this. I guarantee you, I could find some example really quick of one of those right here. Exactly. So at a key level, during a key time, do you see the dojis, 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 dojis fly away, right? Perfect example right there. So this is what happens in our market all the time. And then the last candle is something I made up, or the second to last candle, something I made up. I call it the ample candle. And this is where you just had these big body, 300 pip moves, news more than likely. I love these candles because they make my trading experience very, very beautiful. And I see these a lot and I catch them a lot. So I just call it the ample trading. If you don't know, I did start this because ample means an abundance of whatever you want in this life. God will bless you with in an abundance. And this candle will provide us with an abundance of money. All right. So it's the ample candle. And then over here, and this is the bullish version as well. And then over here, we have the most common one that everybody uses is it's a lot more of these guys. Like we got the morning, the evening star. I don't trade all of that stuff. I don't pay attention to it, but these ones I do notice, and when I see them, I keep them in my back of my head. But I use price action and levels and liquidity more than anything. But you need to understand these things. The last one is the bullish and the bearish engulfing. This is the bearish engulfing. Why? Because we try to push price up. This bearish candle stepped in and then we end up closing lower and we engulf the entirety of this candle. And then same thing on the bearish side, we push all the way down. This is a bullish engulfing. We take the lows and then we close all the way up here, engulfing this entire candle, which shows a lot of strength, especially if that's on the 4 hour or the daily. We could go find those really quick too. As you can see, we have a bullish candle here. It does have a large wick. And then we have a bearish engulfing candle, and look what happens right after that. Big move to the downside. And then let's find a bullish engulfing at a key level. Let's see. Bullish engulfing. So a bullish engulfing candle right here is we got a big candle to the downside with a wick, then we get a bullish engulfing, and then from that point on, as you can see, we moved the hell on up, right? So this is what I want to kind of show y'all, explain to y'all. This is what we do. This is what it looks like. So these candlesticks are to be used and they are to be understood, and we go from there. Now, the last thing I want to show you really quick is these candlesticks can be on a different time frame. And this is where we go to the actual candlestick charts, and I'll show you a quick brief video, but I don't need to show you these candlesticks live right now. In order for you to get them, I need you to see and understand what's going on, and then we could get into more beautiful stuff like these beautiful candles here. So we'll be talking about these candlesticks here. We'll go over a few examples of the inverse hammer, the reverse hammer, all that kind of that normal hammer, the marabozos. And then we'll also talk about the different time frames these candlesticks plant themselves on in print. So I'll see you soon. All right, guys, finally for our last quick little breakdown of these candlesticks, let's look at some real world actions and kind of implementations that we could do. And the most important thing I do want to talk about is time frame. So if you look here at the top left of my screen, you do have different time frames for the charts when you want to look at them. So my favorite is the 1 hour, 1 hour, 4 hour, and daily. Never really look at the week anymore or the month unless you really want to trade long term and really want to go in a direction. I day trade only, meaning like I only trade from 7 to 10 a.m. Central Standard. I do look at the 15 minute. I used to trade the 5 and even the 1 minute. But if you go here on the 1 minute, you'll get a ton of candlesticks and it'll be a bunch of 1 minute candlesticks on here. And then same thing if you go to the daily, then you'll get a candlestick every single day. So right now it's 221. This candlestick will eventually close for GBP AUD, which is the British pound Australian dollar. This will close in an hour and 38 minutes and 46 seconds. If you go to the 4 hour, this candle will close, and then we'll get another 4 hour candle. And then if we go to the hour, then it's every single hour. So if you hover over each candle, we got 10 o'clock, 11 o'clock, 12, 1, 2, and 5 minutes. So the reason this is important, these are all 5 minute candles. So every single 5 minute candle, you will get another, candlestick. And I don't trade GBP AUD at all, but we looking at this anyway. So let's go to the 1 hour. And meaning the reason this is important because when you want to blend everything together, you want to be able to read a candlestick on the 4 hour, but know what it's saying on the 1 hour. So for example, let's try this candlestick right here. Let's highlight it really quick. So let's highlight this candle. So this is our what? Our inverse hammer candle that we talked about, right? This candle open here. Actually, I zoom in a little bit. This candle open here. Push down a little bit, got a small little wick under there, right? Small wick. Push down a little bit and then close here. But what price did do was reach these highs up here. So as you can see, if I move this out the way, this candlestick pushed all the way up here to the two level, level two basically, and then close back down here, which shows a lot of buying pressure, but more selling pressure to keep it down here because buyers could have easily closed price way up here, right? So once that candle prints, we are looking, okay, it may get a reaction to fill half that candle, or it may start to reject to the downside. That is a strong, strong rejection candle. And if you look closely, you see that price fell off the face of the earth because this is the 4 hour, right? So this is probably over 1,000 pips from this level, 4,000 or 400 plus pips that price had actually fell, which is a significant amount of you know, that's a significant amount of area to cover, real estate to cover in the markets for sure. So if we continue on, again, well, now we have a bullish candle, and then we get what? A bearish engulfing candle. So we got a strong inverse hammer rejection candle, and then we have a nice, beautiful bullish or bearish engulfing candle that could signify, hey, we are looking to sell now. Now, where you put your stop loss at and all that stuff is a whole nother program, but this is what I mean by paying attention to these candlesticks. And then as you can see, we get another push lower, push lower. We get a bullish candle. And then what do we get right after that? Another bearish engulfing candle, right? Then we get a doji, as you can see. And I remember I said after that doji, it shows a equilibrium, a sideways price action in the market, right, of some sorts. And then we get a strong push. And as you can see, we get that strong push intent. They fought for price, who wanted it more here, and then sellers came in and took over, right? But what I want to explain is the reason that time frames are important, right here in the left corner, is because we want to be able to read this 4 hour level and know what's going on before we have to go back to the 15 minute or the whatever, right? So if I go back in time and I go, let's see if we got enough. Let's go to the 1 hour. The 1 hour should show some type of reaction low, a push higher. It might just be a 5 o'clock candle, which I think it is, yeah. So it might not show the price action the way it is, but and then we get a push down, right? So we go to the 1 hour. Yeah. As you can see, it shows this big move to the upside and then immediately comes right back down within that time span and within that frame, exactly what we have here, right? And then after that, it follows on with a push to the downside. And then I'll show you guys where that this is that bearish engulfing candle, right? That was the engulfing of it, the start of it. And then I'll also show you where that doji came in. As you can see, we start getting a little bit sideways action, right? Just a little bit. Sideways action. We come back into that range, right? Range. It's like a range right here. It's a nice little range. And then watch when we break out of that range. Boom. So this big move to the downside, that is our doji candle in these areas right here. This is probably our doji candle right here. I'll go back to the 4 hour to show. This is probably our doji candle, and then this is our big candle moving to the downside. And would you look at that? So this is why reading time frames and understanding your time frame is very important because it allows you to understand what's happening. You can sit here on this chart and watch everything, but you know what's going on the lower time frame. So That's all we got on candlesticks. It was a lot, to be honest with you, more than y'all needed, because a lot of y'all know what y'all doing. But it's something I do want to go over because it is very important for you to be able to read these candlesticks and understand the different time frames and things of that nature. So all you need to do before you move on, before you keep going, is go understand these uh these candlesticks. This is a Marabozo candlestick. Matter of fact, this is an ample candlestick, but you'll see a lot more of these big ones on the higher time frame. But if we go to the 1 hour, you'll see some strong ones, but not as strong, right? So that same strong one here, you got some strong ones here. Even this is a very strong one to the downside. Marabozo, 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 right? These strong ones, and then you got dojis in there. And if you see Doji expansion, Doji expansion, Dojis, Doji. This entire area right here, this range, it may be a Doji or two on the daily, right? So let's go see what that looks like. Look at this. Doji, 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 right? The reason why I can say that is because it is sideways, it is rangy. Price stayed within this, so that is creating doji candlesticks on the higher time frame. The higher time frame is creating, I mean, the lower time frame is creating a higher time frame thing. So you have to be able to read what's going on down here to understand what's going on these higher time frames and then move along from there. So with that being said, we are going to go more into our risk management side of everything, break everything down because before we get to the charts, risk management is very, very important. And after that, we'll get into a little bit more spicier stuff like market structure. So I'll see y'all in the next video.